Mittal, CMD at RITES Limited, joining us with regard to the Q3 numbers. We spoke, Mr. Mittal, with regard to Q2. You spoke about how a clear 5-lever roadmap is what you had laid out, and you were ahead of the plan with regard to both order velocity as well as margins. Q3 revenue has grown roughly 5% YOY for you. EBITDA has jumped 20%. Margins have therefore gotten better. Place us with how the progress has played out.
Good morning. Yes, in a nutshell, I think we are on a roll. Very frankly, the assessment that we did after H1, and as you correctly pointed out, the 5-point agenda, Q3 is completely on track. It's whether you consider the order book growing, the strike rate of 1 order a day, we are 1.5. Getting 1 export order a quarter. We got 2 export orders totaling to 350 crores. Sequential improvement. So sequential improvement both in revenue and EBITDA of about 10%. And as you said, margins, we had put a red line of 20% EBITDA and 15% PAT margins, and both are above that. So in all fronts, we are going on all cylinders and trying to leverage, poised to grow on Q4 also, so that overall the guidance that we had given at the end of H1 for the FY, we should be able to achieve that.
Okay, and talk to us about the order book itself. You're now at roughly 9,300 crore in terms of the order book. Is this a level that you're comfortable with? Will you continue to grow the order book as you grow? Would you and how does execution play out? Talk to us about those pieces.
So yes, you see, we had also set a target for about 10,000 crores order book reaching into somewhere in Q1. And this quarter itself, we have got about 140 plus orders totaling to about 1140 crores. So the order book is continuously growing, and the way Q4 is also going, we are definitely hoping to reach about 10,000 crores in Q1. As far as execution is concerned, as I pointed out at the end of H1, about 2/3 or 60% of this order book is very young, is about less than a year or so. And that's why I said that sequentially, we will step up on the execution and we will grow. So that's why if you see even sequentially, for example, the turnkey contribution has grown by about 60 crores. So as the execution steps up, as we grow by go to the end of the first year or so in most of these orders, the execution in Q4, Q1 subsequently will definitely grow.
I want to talk a little bit, Rahul, over here about exports. While they saw a sharp jump in this quarter with margins expanding over 500 basis points, but in Q2, I recall you had cautioned about export margins would normalize over a few quarters. Is Q3 now close to the peak export margins, or can this level sustain as volumes also scale up for you?
You see, as far as export is concerned, the shipment started from Q2 onwards, and that trend has continued and will continue. In fact, Q4 we are expecting higher deliveries, higher shipments. So as these margins normalize, these orders which we have got an all-time high export order book of 1,700 crores. Most of them are on the competitive, scenario. So the margins are much tighter, and the margins will normalize in the export over a period of few quarters as these average out in the range of about 10 to 12% on the export stream of revenue.
And with regard to the top line itself, we've seen. So while your order book has done very well, you're very close to that 10,000 crore number. The step up with regard to revenue hasn't happened. When does that happen, sir? Give us an indication. Is that an FY27 kind of aspiration, and by how much will it go up? Because you've got visibility, of course.
So you see, as I said, the execution on all these projects have started. The Q3 to Q2, there's a jump in the turnkey contribution by about 60 crores. Q4 definitely it'll be much higher. So overall, on an annual basis, we are aiming to, have at least a double-digit growth YOY on the revenue, and definitely sequentially as the pace picks up both in export shipment as well as in the turnkey execution, the project execution and subsequent consultancy fee. Also, the overall growth. As I said, FY26 will be a year of growth, but FY27 will be a year of disruptive growth for us.
But tell me, consultancy continues to be your highest margin and most stable segment for you. I understand that it's contributing about 35% for your margins, even in the quarter gone by. With rising competition now, do you think these numbers and margin contribution will sustain or get better?
So you see, consultancy out of all our streams, we are primarily a consultancy company. So our core strength is consultancy, and this is in the range of about 30-35%. Yes, competition is very high, and in spite of that, as I said, we are getting 1+ strike rate of orders per day. This quarter was 1.5 orders per day, and more than about 65-70% are on competitive basis. So while the competition is tough, but I think because of our USP, we are getting continuously good orders, and we will strike a balance between the high margin and low margin orders. But I think consultancy would remain in the range of 30-35%. We will not allow it to go below that.
Okay, and with regard, Mr. Mittal, with regard to the way in which your margins are shaping up, you've traditionally done 25% plus. We've seen a bit of pressure in recent times. Now we're starting to see an uptick there. Does it go back to 27% where you were earlier, or is this sub 25% is what can be expected in the medium term? You've got order visibility as well, so give us a sense of how margins play out therefore.
So you see, the era of 27% odd margins were, most of them were on the nomination era, whether it was in the consultancy business or whether it was on the export business. All our export orders, as I said, or most of them are on global tender, competitive basis. In the first time in our 5 decades, you've got orders on global tenders in export of rolling stock. Similarly, about more than 2/3 of our consultancy orders are on competitive basis. So the era of having about 27% odd EBITDA margins, those are definitely gone. We had put a red line, as I had indicated, of not below 20% in EBITDA margins. And this quarter has been, in fact, better. It's about 24%. That's because of the mix of export and consultancy in the overall revenue mix. But as I said, my guidance would always be that it would be not below 20%, somewhere above that on an average annual basis.
Understood. So a double-digit uptick in top line, a margin in around the 20 to 25% band. Is that something we can expect sustainably, maybe over the next 2 to 3 years?
Yes, for sure. In fact, that's our roadmap. As you said very correctly, the order book visibility is there. It's growing. Even the Q4 trend is showing that. We have as I said, the FY26 was a year of growth. FY27 will be a year of disruptive growth. And I repeat that all these orders will give better execution sequentially. And I think you put it very correctly, a double-digit uptick on the top line and a red line of 20% plus EBITDA margins.
Rahul, what would you say is the biggest sort of watch point, if you will, as we go into the next fiscal as well? Would you say that the main swing factor continues to be the turnkey revenues, or rather the timing of those?
No, I think, you see, let me be very clear. Our turnkey is a low margin stream of revenue, right? And we are not a construction company. In fact, the turnkey orders are also primarily consultancy, is just the way of the accountant of the order. Our scope of work remains same, whether we take it in a turnkey mode or in a consultancy mode. So the key point to watch is that while there is increased competition and we will maintain that strike rate of 1 order a day, we will not compromise either on the quality or margins beyond a point. Number one. Number two, this trend of getting export orders and international consultancy orders. I must tell you that today our overall RITES Videsh consultancy come export orders is at a total of 2150 crores, which is the highest ever in our history. So this watch point of getting more and more international orders, whether it's in export or in project consultancy, that's our key focus, which we will continue to work on.
Okay, good to hear that. And thank you so much for your time today, Rahul.